you for joining this pop-up live trading session. Let's jump right in and let's do some trading and talk about the markets. Looks like we finally have a somewhat negative sentiment going across the major indexes. We have the ES that is down now. It's been up all day, and we have the Russell and the Dow that's down this morning. The Nasdaq is still holding, still up and holding strong, but it's about 100 points off its high. Just about 15-20 minutes ago, it was over $200 up. So we'll see how the rest of this day, this trading session plays out. But this market seems to be pretty strong, even though I believe it's short-term overbought at this point. So it wouldn't be surprising if we can get a pullback, if not today, tomorrow. But we do have the Fed coming out tomorrow with its interest rate decision. No one expects them to change anything. It's still going to be zero, but they could talk about doing some other things. They could talk about how dovish they are. They could talk about how much the economy still needs to be supported. But the Fed did get what they wanted. They wanted the federal government to pass the stimulus, and that has occurred. And some people are already getting checks or the direct deposit into their account at this point. And then I'm sure the states are starting to get their monies and so forth. So we'll see how that plays out. But the Fed was hoping they can get a little bit more stimulus because they believe that running hot is better than potential fallback or economy type of slowdown. So we'll see how that plays out. But regardless, I still think we're short-term overbought. We went up too fast, just like we were at one point about a week ago. Short-term oversold. All right, so want to look at a few things. First, I want to check out this RTY this morning. We have this position on, and we took off one contract already this morning. And let me show you that we took off this. Let's go with this field. We took this off here, and it's only 3 days to go. So we're just reducing some of the risk on it. And as you get closer to expiration, if you're using span margin, it requires more margin because it's more risk, it's more gamma risk, it's more directional risk as you get closer to expiration. So to take off some of that risk, you can just kind of peel off some of the contracts, right? And most of us, we have this problem of thinking, okay, it's still a lot in the trade. I do not want to take off too much. But you have to think about risk first before you think about how much you could make. You think about how much you could lose first, and then start the process of reducing risk. Or if you're comfortable with that risk, and then you can continue with the process of trying to make more. So in this case, what we're going to do is just take off one more. I don't know if it's still as good as it was about 30 minutes ago before I sent out this pop-up live request. So let's take off one more and see what it's trading at. So it's better than what I did this morning, right? It's at 240 right now. So we're going to take that off, and we're going to send that, and we're probably not going to get filled right away, but we'll force this for demonstration purposes, and then we'll do some other type of trades. All right, so let's let that sit for 1 second, see if we can get that filled at 45. It's probably not going to fill us at 45. All right, so let's try 50. All right, so there we go. So we got that off, and that was a little better than we had this morning. So now we only have on one contract with 3 days to go. On the call side, it's a 7 delta, which is safe for now, but that can change very fast when you're dealing with gamma risk with just a few days to expiration. So on the put side, we're at the 16 delta, and that's not too bad. That's just our lower area, the first level of the yellow area. So we're still fine there. So we'll let this contract play out. We probably take this one off tomorrow, and then we'll be done with this 3-day one. I wanted to point out that a number of have this CCIV on. It's been difficult to trade this week, and since it got its legs back under it, and it's just been going up. But some of the time it's going up big, and then it reverses and then kind of settles out where it started. But yesterday it was up quite over 10%. Today it's up At one point, it was up about 10% today. It's a little down. It's down from its high, but it's still up about 7%. And we made an adjustment here. We sold the put and the call at the same strike. And we sold it at the same strike. It turned into almost like it did turn into an iron butterfly. And what we're betting now is that we might have to adjust it again, but we're betting that we have enough premium to be able to help us enough, right? So let me show you what I mean by that. We have $700 basically in premium that we received. We have 2 contracts. So you take that 700 and you divide it by 2, and that's going to give you 350. So that's 3.5 points, right? So you just do the math and you say, okay, we're at the 31. We can go to the 26.5 before we start losing, right? That's where we were break even at the 26.5, because 30, actually that's at the 27.5, excuse me, because it's the 31. I was thinking 30, but at the 27.5, so we'll break even on the put side. So basically right here, and on the call side, we'll break even at that's 34.5. So about right here, we will break even. So that's just outside of expected move right now on the call side, and on the put side, that our expected move is outside of the outside of the expected move right now. So this is a good trade for us. We can let it sit for a little bit. I will not make another adjustment today, but we might make an adjustment tomorrow to kind of move away from the iron butterfly, but we'll see. But right now we're okay, and if you follow this, you should be okay for at least a day. But it looks like this is going to take us to the wire, but we're going to use the premium that we have to try to at least break even. Obviously the goal is to make money, but you don't be worried if you go into the money. You have that premium to protect you, right? We talked about acting like that insurance company. If you have an accident and the accident is less than what you paid the insurance company still wins, right? So right now we might have an accident, but as long as that accident is less than what we received, we're going to still win. Okay? So that's the goal here. All right, so I sent out some trade ideas this morning. I sent out 7 trade ideas. Let's go into a few and see how they look. All right, so the first trade idea I sent out was the RTY, which is the Russell. It's down quite a bit today. So I was looking at selling a short put spread with 16 days ago, trying to give you different expirations so you can be diversified. So this is a little bit, I've made this a yellow highlighted trade, but it's a little more risky than normal because of the short time frame. But I like this trade based on, I don't think the Russell's going to fall too much. And if it does, we can roll this out because I don't think it's going to fall for a long period of time. Even though I know I sound like I'm two-faced here, even though I think it's short-term oversold and it's good, excuse me, overbought, and so it's good that it's dropping today. It's good that it's dropping today. It makes it a little bit more healthy. All right, so looking at selling the 2170 and buying the 2140. So this is going to be a 30-point wide spread, put spread on the RTY. This morning when I sent this out, I said at least $3. It's still trading right there, and you can see that this is a really good trade. You can get over $100, 143 with buying power way less than 12%. Maybe in this account it's better than yours, but your account probably will only require about $500, $600 if you don't have anything on, perhaps, and you will still meet our requirement of how much you want to make on your buying power. So I like this trade. That's consider this one. It's another one that I sent out for the RTY. We're going to go over that before we decide which one we're going to do. So I also sent out a longer dated, a little less risky because it's longer dated. You can deal with a bigger size move in this case. So this is 66 days selling a short put spread. And so let's go over here and let's look where we were doing. We're selling the 2010. So it really had to fall quite a bit. So we sell the 2010 and buy the 1990. This is a 20-point wide spread, and you're getting at least 200 after fees and commissions if you get filled at least 225 here. So if we hit this review, you can see that we're getting at least 100, 105 there over 116. Once again, yours might even be 500, 600, but that's still more than what we require to receive on your buying power. So this is a pretty good trade as well. I like this one. 66 days is a little longer than we typically trade, between the 30 and 60, but this is good to be diversified. We talked about having some long dated stuff, having short dated middle length trades, so you can be diversified by expiration periods as well, not only by strategies or products and deltas and things like that. All right, so let's look at our last R2Y trade this morning, and then we'll decide which one we like the most, right? Now looking at this one, we were looking at 31 days to go to expiration on this one, and we're looking at a no upside risk iron condor. So in this case, we are selling the 24.25, and at this time it was a 30 delta. It is still a 30 delta. 24.25 buying the 24.30, and you can see that just the call side, we're receiving about $80. Max loss is about 170. Okay, so if that's the case, to have no upside risk, you need to receive at least 170 on the put side. So we're going to go over there and we're going to sell the put side at the 2100, and we're going to buy the put side at the 2060. Okay, the 2060. So that's a 40-point wide spread on the R2Y using the Russell options on futures. And so this morning I was saying 570. You can get 550 now. Maybe you can put it at 570 and let it come to you. And if it comes to you, then that would be a decent trade. So let me show you how this looks. You're getting 271. The max loss is 250. So when we go over here and show you here, you're getting some short delta, so you can see that there's no way you can lose to the upside based on this chart. This is the at the money line here, so if it goes down, it has to go down quite a bit before you start losing. If it goes up, it can go up into perpetuity and you will not lose. This is a no upside risk iron condor. We're going to be talking about this tonight in person in the Houston area. So if you are in the Houston area, you want to come out to that location, please do. Otherwise, participate in the webinar that Ernie and Gustavo is going to be leading tonight on the blueprint of selling put spreads and call spreads to make money. That's going to be really good. I have seen the presentation. It is really good. So I encourage you to participate in that if you can. If not, as a member, you will be able to see the recording of that one. We do not record at this time. We did in the past, but at this time, we do not record the live events. Well, I'm sure we'll do that again in the future. All right, so talking about the live in-person events. All right, so that's the R2Y. Does anyone have a feel or a suggestion on which one of the three they are interested in doing, or would they like to me to execute? If you do, please unmute your mic. If not,
maybe the last one with no upside risk, Brian. I'm interested in doing that one.
You're interested in doing that one? Okay. All right. It'll give you some short delta and see how it plays out. All right. So let's do that one then. Let's do that one and let's put in the 570 and see if we can get filled. If not, what we're gonna do is adjust it a little bit so we can get filled for demonstration purposes. All right. So we're gonna send this here and all right. So that is a little off. So what I'm going to do is cancel this, and what I'm going to adjust, I'm going to go into, if you're on the TastyWorks platform, it's going to hit similar order, and what I'm going to adjust is the put side. We got a little room to move up the put side a little bit to stay at a 15 delta, but move it up a little bit, see if we can get the monies that we want. All right, so I'm going to move this up here and keep it 40 points wide. So I'm going to go there, and then we're going to go here, and then this is going to be 40 points wide. Now we're getting a little wiggle room We want 570. We're getting 580 here. If we can get filled, I think we can at least get filled at 570. Hopefully, if not, we're just gonna let it sit because with these type of trades, you have to get a certain amount so that you do not have any upside risk, right? And so the max you can lose on the upside is 250. So if you're collecting more than 250, then that means it's no way you can lose on the trade. Okay, so but because of theta and so forth, you should be able to get out of the trade before expiration and so forth at 50 to 75% of max profit. So I like this. Let's drop this down and let's see if we can get filled at the 570. Let's hope that's the case. All right, so 271, we're send and no love. So we'll just let that sit for a second and let's go into a different trade, and whichever one feels, that's the one we're gonna do.
O'Brien?
Yes.
What are you playing the 21 April 21st expiration date?
I'm playing that, and in this case, the 31 days is April 16th expiration date, the one we just did.
Okay, that's what I'm on. Okay, I was on the wrong one. Okay, thank you.
You're welcome.
Do you mind if I quickly share my screen? I see a different credit.
All right, so we just got filled on that trade. So yeah, you can share your screen if you want to.
Okay, let me quickly share.
We just got filled on that, and on that iron condor with 31 days to go, we're not gonna hedge that one, everyone. We're not gonna hedge that one because we don't have enough premium on that one to hedge. I know we're receiving $200 and something, but if it goes up, we need that premium to be able to deal with the upside. Okay, we could buy a call spread to the upside. That actually could work, and then you would minimize your upside risk and have a chance to make even more as the upside goes. We might even do that because I haven't did that in the past. All right, so go to the trade tab, and you have something that's off, right? So you have the 31 days. Go to let me just make sure we're on the same RTY 31 days. All right, so yeah, you're doing the wrong trade. So delete that part. Delete that 24, 30, 25, 24, 25. So you were doing a bullish bear strategy. You want to do, this is a no upside risk iron condor. So you got to go to the call side. So maybe you're not even gonna like this trade as much now because you were looking at it incorrectly. But that's fine. Go to the 30 delta on the call side.
Okay.
And sell that, and then you're going to buy. Let me just make sure I'm giving you the correct strikes here. 1 second. If you're not talking, please unmute your mic. If that sound is coming from, if it's not coming from. All right, so awesome. So buy the 2430.
Okay, now I see that. Okay, with the fall, that's what I mean.
Yeah. So now put it in at yeah. So it's the same type of trade dynamics. It's just that instead of buying the put spread that we do with the bullish bear, we're selling a call spread, but we still don't have any upside risk. So put it down to 570, and you should get filled. If not, you just hold it for a second because I just got filled. Did anyone else do this trade?
I'm trying to do it, O'Brien, but I'm doing it for the first time on my tablet on the Thinkorswim platform. So I was just wondering, do I have to do the put spread first and then the call spread, because I was going to execute it all in one shot, and it all like kind of I'm back to square one.
Okay, you have to do it. You have to do it in one trade, Norman. But unfortunately, because of time frames, I'm not gonna be able to walk you through it. So you're gonna have to
Figure it out.
Yeah, you're gonna have to do. I can tell you what strikes they are and so forth, but I wouldn't be able to obviously walk you through
just
it.
tell me the strike prices. Just tell me the strike prices on the call right now.
On the call? All right, so I'm gonna take the screen back, everyone. So thanks for doing that trade, by the way. And then let me see. Um, that was was that Steve that I was talking to? I didn't get to see the name.
Yes, yeah, Brian. Yeah.
Okay, perfect. Thank you, Steve. Thanks for doing that trade with me, and that's pretty cool. So I like that those no upside risk trades give you some short delta. All right, so Norman, the call side is the 24.25. You're selling that the 24.25, and you're buying the 24.30. Selling the 24.25, buying the 24.30. Okay.
Okay, got that.
All right. So and you got the put side already, correct?
No, the put side I didn't get. 24.25. I'm selling that one, right?
Yeah, yeah. So I'm gonna put this in with in Telegram. Would that help you?
Yeah.
Okay. All right. And I'm pointing at the put side for you since you got the call side, all right? Oops.
Right.
Let me do this real quick. All right, so put in this in Telegram and then we're going to move on. All right, so 1 second, everyone. I apologize for the delay here. Come on. All right, so Norman, if you can mute your mic, that'd be great. Thank you. All right, so there you go, Norman. It's in the Telegram area. All right, so let's move on and let's look at a few other trades ideas and then we'll call it quits for this live trading. We have XPPI. We gave a trade idea on this, I believe, yesterday, but this is another one. We didn't get filled on that one yesterday. So on this one here, this is a 10-point wide spread. It's going to be a little higher now. It's around the 13 delta. Excuse me, 17 delta. But you can see you're getting about 145. When I sent this out to this morning or a little earlier, we were getting 135. So it went down a little bit, but it's still up today. I still like this trade. If you get filled, um, hedge it in the QQQ at the 30 delta or near the 30 delta, so that if this goes down, you have somewhat of a indirect hedge. All right, so I like this trade. It's not bad. It's not as good as the one we were trying to get filled on yesterday because that was only 5-point wide and we were getting over $100. But this is still a decent trade. All right, so next trade I was looking at this morning is the Apple skewed iron condor. This does have risk to the upside. This is not a no upside risk iron condor, but based on how Apple's been trading, I'm very bullish or positive on this trade, and that's why we made this a yellow highlighted trade. It's an iron condor if you can get what we want, right? So if you can get 105, then this is a trade you should do. So put it in if you're interested in it, and then just let it sit until you get that. So what we're doing is selling the 113 on the put side, buying the 108 on the put side, and then that is a 5-point wide spread there. And then on the call side, we're doing a 5-point wide spread as well, the 140, 145, and we want to try to receive at least 105, and that's going to be a buying power effect of just 395. So this is going to be a really nice trade if you can do it. You can see here you're getting the 105 is on purpose so that you can get $100 after fees and commissions. If your fees and commissions are less than $1 to initiate, then that works. But keep in mind, TastyWorks is $1 to initiate each leg, but it's $0 to close. So it's really like 50 cents an option. On Thinkorswim, it's 65 cents an option. So you can play with it if you want to get something a little less than 100. But I like to be a stickler about what I'm paying in commissions and want to receive at least $100 on this trade, even though it's only a 5-point wide spread. All right, so this is the Apple trade. Really like this one. I once again made it a yellow highlighted trade. I'm going to do this trade. Everyone, on the we already have an Apple on this one though. And they already have one in 31 days. That's the 31. That's just 38 days. Huh. I might double up on this and show you guys how this is done. I really like this trade. All right, so let's do it. All right, so if we get filled at the 105, we'll do it. So let me put this in if I can get this to populate here. All right, there we go. So we got AA, got the PP, AAPL, and then we're gonna go to 38 days, and we're just gonna do this really quickly. I just thought about it that I wasn't gonna do this trade, and just thought about I wasn't gonna do it in the TastyWorks platform. I just thought about maybe we should do it in this one. So, all right, so we're gonna sell the 113 on the put side. We're gonna buy the 108 on the put side, and then we're going to go to the call side, and we're going to sell. Move this up a little bit. We're going to sell the 140. We're going to sell the 140. Where is that at? That's over here. We're going to sell the 140 and buy the 145, and that's the iron condor, and it's obviously dropped since at least the TastyWorks Thinkorswim platform is saying less. We're going to do it for 105. We might not get filled, but if we get a drop back down, we would potentially get filled. So that's what we're going to do. You can see that it's misleading a little bit here because it's only 65 cents a contract initially, but you do have to pay 65 cents to get out. All right, so we put that in. We're gonna let that sit and see how it plays out. And if we get filled, then great. If we don't, then no problem as well. All right, so the next trade I wanted to look at this morning, or this now is afternoon. I wanted to look at this Facebook. And this is the trade that I sent out. This is also an iron condor, a lot of iron condor trades today because of, I think that we're overdone to the upside, and I think these are pretty high probability trades based on where they've been. But it doesn't mean that I'm not 100% confident on these, so I didn't make this a yellow highlighted trade, but I do think it's a good trade. Every trade that I recommend, I think it's a good trade. It's just that I differentiate between good and excellent, if that makes sense. I believe the yellow highlighted trades are excellent. All right, so this Facebook one is selling the call side 325, buying the 330, and then on the put side here, selling the 240, buying the 235. These are all 5-point wide spreads. This is actually a really nice one as well. If you can get it for, once again, 105, I would take that monies and I would hedge it with the QQQ, right? Take some of that monies and buy the put side. Excuse me, on this one, I'm saying the call side. Buy the call side. I feel like there's more risk to the upside with Facebook, so I would buy the call side in the QQQ to hedge it. Facebook is within the QQQ 100 Nasdaq 100 index. All right, so the last trade idea that I have this morning is Netflix, and we haven't traded this one in a while, but we're going with the 24 days to go. And once again, we're doing an iron condor, and if we get filled, we'll hedge the put side on this one. Okay, so on the call side, we're looking at selling the 595 and buying the 600, and then on that's a 5-point wide spread on the call side. On the put side is going to be a little wider, I believe. So yes, so on the put side, we're selling the 490 and buying the 482.5, and it's a really good trade, right? I was looking at it this morning for 136. It's going for about 132. I would put it in at 136, let it come to you just in case Netflix or the market drops a little bit later in the day. You can potentially get filled. If you get filled, hedge the put side in the QQQ. If you get filled, hedge the put side in the QQQ. This is 24 days to go. I like this trade as well. This might have a better opportunity to get filled than the Apple, but we're gonna let that Apple sit just in case it drops later today. And if we get filled, so this is the Netflix one. Anyone doing any of these trades, the Facebook, the Netflix, Apple. Anyone doing those?
I just tried to put on the Apple. I have not got filled yet.
Okay, same here. So I just let it play out. That's Ron speaking, right?
Yes.
Okay, perfect, awesome. So,
Brian,
all right.
I'm planning to do the Apple as well.
Okay, awesome. So, any questions before we conclude this live trading? Because this is pretty much all I have this afternoon that I wanted to discuss.
Yeah, Brian, I have a question. I don't have time to see my screen again. I have 50% profits on a couple of put trades, Mara and Caterpillar. Do I just close those trades?
Show your screen again, Steve, please, because I want to make sure that it's just a put spread. If it's not if you got an iron condor on, then you want to wait. But if it's just a put spread, then yeah, you can ring the register on those. So yeah, those are put spreads. So perfect, right? And you're up over 50%. So you should get 50% after fees and commissions. So yeah, ring the register, Steve.
So I saw when you click right click, it says close for you. It doesn't say that for me. So how do I do that? I do okay, right.
So that one says that, yeah, that's how you do it there. So it's two ways you can do it, Steve. So you can do it the way you just did, or it's actually three ways. You can do it the way you just did right now by clicking close position, or you can hit close by profit, right? So you see that profit right there? So right now it's saying 50%. If you close by that, then that's, that works. Or you can say 55%, and then that you've received what you want after fees and commissions, right? So that's how you can close out. And the third way, you could just go into the option chain and do the opposite. So if it's a buy, you sell. If it's a sell, you buy. Okay.
Yeah, I think this is the easier one, right? That's what just close
Correct.
position.
Correct. That's the easier one.
Okay, 55 maybe because of this. And when I just saw like you are able to right click this and do a similar order, I'm not able to see that option.
So I did that. You can only do that in the activity screen after you have counted it. After you have counted it, you can do or field, right? You can do a similar order at that point. So so just what you just did right now, you can do it. So
thanks for this. I just like if I want to take 55%, like I just send it. Right?
There you go. And then on options on stock, you can put good to cancel, so that close percentage wise is a good to cancel order. So that works, right? So you can put it in at 55 or something that's 50, whatever percentage you want, you put it in, and then it'll be a good to cancel until that happens, right? There you go.
O'Brien,
Yes.
would you review the hedge on the Facebook and the QQQ?
Yes.
How to set it up again?
Yes. So I'm about to go to the I'm about to take the screen back here. So thanks, Steve. That helped. A lot of people have questions with that. All right. So going to the QQQ, what you would do is that Facebook trade is a 45-day trade. So you're going to find the 45 days or something close to 45 days, but not more than 45 days if they didn't have the 45. Since they do, what you're going to do, when we said on the Facebook one that we were going to hedge the call side on this one. So what we would do is go to the call side here, and we're looking for a 1 point wide spread if we can get it, right? So and unfortunately, this doesn't have a 1 point wide spread on this order, right? So in this case, it's gonna require too much buying power to do this. So I wouldn't do it on this, right? It's gonna cost too much, as you can see, right? I didn't look at this. I just assumed that it was gonna have a 1 point wide, because most of the time they have 1 point wide spreads. In this case, they do not, unless you go all the way up to unless you go all the way to the 49 delta there, and then that's gonna be too much. So that's why we don't go that high, right? So and they don't have anything lower than the 30 delta. It's going 5 points wide. So if you have options on futures and you're on the TastyWorks platform, I don't know what platform are you on?
TastyWorks.
Okay, perfect. So you can go to the /MNQ. This is gonna be on Thinkorswim in a bit. I don't know when, but when you try to do it, they're telling you it indicates it's coming soon. So I don't know what soon means, but hopefully that's in the near future, like next week or so. But we go to 45 days here. You can do this one in the micro options, right? Just you only want to use about $30 because that's what you receive.